Hello everyone, this is Gracie here. In this video we'll be discussing problem illustration for problem on calculation of goodwill. X Limited acquires all shares of Y Limited on 1st 4 2014. The profit and loss account of Y Limited has a credit balance of rupees 6000 on 1st 4 2014. So credit balance in the sense it is a profit. From the balance sheet given, calculate the capital profit and cost of control. So we have equity and liabilities, we have share capital, reserves, profit and loss, sundry debt creditors, and bills payable. We have reserves here on 1st April 2014, which will be used for calculation of capital profit, and profit and loss is given for X and Y. X is our parent company and Y is our subsidiary company. What are the other informations are? Assets are given: land and building, machinery, furniture, investment in shares of Y Limited. So they have acquired 5 lakh shares. Inventories 1,50,000, debtors and cash equivalents information is given. So X Limited had acquired all the shares of Y Limited. So Y Limited had how many shares? Y Limited. So we will be calculating that using our ratio calculation. So then they have given us profit and reserves. So this is the question. Let us jump into the solution part. So according to the solution, so to get into the solution, we need to know what they have asked us to find out. So in the question, if you read the question, they have asked from the balance sheet given, calculate the capital profit and cost of control. So to calculate the cost of control, they have asked us to calculate the two methods, that is capital profit and cost of control. Capital profit is after finding out the ratio, then we will calculate the capital profit, then revenue profit. After revenue profit, we'll calculate minority shareholders, then we will calculate cost of control, that is goodwill or capital reserve. So here they have asked us to calculate capital profit. For calculating capital profit and cost of control, cost of control is the information about goodwill and capital reserve in that. So we need only capital profit, we don't require revenue profit in that format. So first we will calculate our ratio. So now when we calculate our first step, which is calculation of ratio, we need to have the share value of Y Limited, that is your subsidiary parent company's acquired shares. So when we read the question, it clearly states that the question which clearly states us that all the shares, that is X Limited, that is the parent company, acquires all the shares of Y Limited. So all the shares are being acquired. So there is no shares which is being acquired by minority shareholders. If there is no share which is acquired by minority shareholders, there is no need for calculating capital ratio, because all the shares which is being gained will be given to the parent company. So the ratio calculation is not required. So we will directly get into the calculation of capital profit. So to calculate capital profit, we need to have the profit and reserves of the pre-acquisition, that is before acquisition. So here in this adjustment, they have given the profit and loss account of Y Limited as a credit balance of rupees 6,000. So credit balance in the sense the profit, that is on 1st April 2014. So this belongs to the capital profit. So as it belongs to the capital profit, let us get into the calculation. First step, calculation of capital profit. Profit on 1st for 2014 is 6,000, which is taken. Then general reserves is mentioned here. Reserve on 1st April 2014, which is 40,000. So we will take 40,000. So the general reserve and profit, which is total, is 46,000. So the date of acquisition is on 1st for 2014. So it is not between in the mid of the year. So nothing to be divided and to be added on in your capital profit. So the total is for 46,000. So the 46,000 is your capital profit, which will be given up to your parent company. Next, calculation of cost of control. So here we don't require calculation of revenue profit because revenue profit calculation is not required for calculating cost of control. So calculation of cost of control, cost of shares held by X Limited as per the format, cost of shares held by the parent company. So what is the cost of shares which is held by the parent company? If you look into the question here, they have mentioned all the shares of Y Limited has been acquired. So the share capital of Y Limited is 3 lakh, but you have an investment in shares of Y Limited where X has bought shares from Y Limited for rupees 5 lakh. So the exact cost of shares held by X Limited is rupees 5 lakh. But what with that we will minus less face value of share. What is the exact value of that share of rupees 5 lakh? So the exact value of the share is 3 lakh, which is exact value of Y Limited share is 3 lakh. So we have taken 3 lakh and share of capital profit. So we have got capital profit which is 46,000. So face value of shares 3 lakh plus 46,000, which will give you 3 lakh 46,000 will be minus from the cost of the shares of 5 lakh. So 5 lakh minus 3 lakh 46,000 will give you your cost of control, which is 1 lakh 54,000. So the next problem, illustration 5, problem on calculation of capital reserve. So S company acquired the whole of shares of M company on 1st April 2014. Their balance sheet as on 31st March 2015 were as follows. So S is your parent company, M is your subsidiary company. Share capital is given, general reserve, profit and loss, sundry creditors, assets, sundry assets, investment in shares, and they have given information about from the above balance sheet calculate capital reserve. So when we get into the first step, that is calculation of capital profit. So calculation of capital profit, in the question we have general reserves. So general reserves will always appear in the calculation of capital profit, not in the calculation of revenue profit, because general reserves is accumulated reserves which is being accumulated from the previous year. This general reserve will appear in the capital reserve until and unless any specification regarding general reserve till the date of acquisition is given in the adjustment. Then that amount will be appearing in capital reserve, and the remaining balance would be appearing in your revenue profit calculation. So as here in this question they have not stated anything, and the adjustment also doesn't state about anything about reserves. So suppose in the question, in the adjustment, if they have stated that general reserve up to the date of acquisition is so much, we will minus that balance, that amount with this to find out what is the general reserve post acquisition, and we will take that into revenue profit calculation. Otherwise the full amount will be taken in capital profit calculation. So now capital profit calculation, general reserve fully is taken and there is no profit which is mentioned in the problem. So profit will always be for this current year unless and until any adjustment is mentioned that a certain percentage is for pre-acquisition and certain percentage is for post-acquisition. So only general reserves will be considered. So the total capital profit is 1 lakh. Next step is calculation of revenue profit. To calculate revenue profit, we have item only profit and loss here, so which is 50,000. So 50,000 would be taken. So profit is 50,000. So revenue profit is 50,000. So next is they have asked us to prepare capital reserve account. In the question, they have asked us to prepare from the above balance sheet, calculate capital reserve. Capital reserve is nothing but the negative balance what you get. It is either capital reserve, cost of control, or it is called as goodwill. So now calculation of capital reserve. Cost of shares held by S Limited. So what is the number of shares which is held by S Limited? So S Limited is here your parent company. How many shares is S Limited acquired from M Limited? So they have investment shares in M Limited which is 5,40,000. So 5,40,000 is held by parent company from the subsidiary company shares which is 5,40,000. What is the face value of that shares? Face value of such share is 6 lakh. So here they have clearly mentioned whole of the shares of M company has been acquired. So full share has been acquired. The cost is the investment what they have actually bought is 5 lakh 40. But how many shares are there? What is the value of the total shares is 6 lakh. So face value of the shares acquired by M Limited is by S Limited is 6 lakh. Next, share of capital profit. So here we have got profit. So as the shares are fully acquired by the parent company, there is no division to parent and minority shareholders. It is fully to parent company. So the capital profit is 1 lakh. So 6 lakh plus 1 lakh will give you 7 lakh. So we will minus with the 5 lakh 40,000. So 5 lakh 40,000 minus 7 lakh. Obviously it was giving you a negative balance, which is giving you 1 lakh 60,000. If the balance is negative balance, then you will be stating it as capital reserve. So you'll be getting a loss of 1,60,000. So the loss to be the amount of the loss to be covered by the bracket. Open the bracket and close the bracket. So it resembles or indicates that it is a negative answer. So 1,60,000 is the negative balance. So it is called as capital reserve. So the next problem is illustration 6, problem on preparation of consolidated balance sheet with goodwill. H Limited acquired 8,000 shares of rupees 10 each in S Limited on 31st March 2015. The summarized balance sheet of H Limited and S Limited were as follows. They have given equity share capital shares of rupees 10 each. 2 lakh for H and S is 1 lakh. Then they have given reserves, profit, bank loan, Sunday creditors, bills payable, machinery, furniture, investment, shares in S Limited. So investment in S Limited. So the parent company is invested in the subsidiary company, that is they bought shares of 98,000. Then inventories, sundry debtors. Then you have bills receivable, cash and cash equivalences. So now on the date of acquisition of shares by H Limited, that is your parent company, the S Limited, your subsidiary company, add undistributed profit of rupees 1,500 and reserves amounted to rupees 5,000. So prepare the consolidated balance sheet as on 31st March 2015. So we will be preparing first the capital ratio step by step. So our first step will be calculation of ratio. Number of shares in S Limited, 1 lakh shares, which has been accounted. Calculation of ratio, number of shares by S Limited, that is total number of shares which has been acquired by or which is there with the subsidiary company is, as per the question, number of shares, total number of shares is 1 lakh rupees of rupees 10 each. So 1 lakh divided by 10 will give you 10,000 shares. Out of 10,000 shares, H Limited, that is parent company, has acquired 8,000 shares of rupees 10 each, which is mentioned here. 8,000 shares of rupees 10 each. So 8,000 shares of rupees 10 each. So 8,000 shares and 10,000 minus 8,000 shares, the remaining number of shares is 2,000, which has been bought by the minority shareholders. So the ratio will be 8:2. 8:2, which can be further simplified. 2 ones are 2 fours are, so 4:1. Next step is calculation of capital profit. So reserves on the date of acquisition of shares, and we need to check whether there's any profit. So in the question they have not stated anything, they have given us reserves and profit and loss, but in the adjustment they have stated on the date of acquisition of shares by H Limited, the S Limited had undistributed profit of 1,500 and reserves amounted to 5,000. So on the date of acquisition also, the amount which is there on the date of acquisition also will be going to pre-acquisition profit or calculation of capital profit. So on that day it was profit was 1,500 and reserve was 5,000 as per the adjustment. So reserves on the date of acquisition of shares is 5,000. Profit on the date of acquisition is 1,500. So the total will give you 6,500. So now this 6,500 will be distributed to the parent company and the minority shareholders. 6,500 into 4 divided by 5, which will give you 5,200, and 6,500 into the ratio 1 divided by 5, which will give you 1,300. Next is calculation of revenue profit. So to calculate revenue profit, here in the adjustment they stated till the date of acquisition the profit and reserve is so much, but in the balance sheet it includes the overall reserves and profit. So this is the profit from first 4 2014 to 31st March 2015. So the reserves the reserves, total reserves in the question which is given is 15,000
6,000 is the total reserves. Out of 15,000 total reserves of S Limited, you need to look into only the reserves of S Limited. So S Limited reserves is 15,000. In that 15,000, pre-acquisition reserve is 5,000. So 15,000 minus 5,000 will give you 10,000. Then the profit for S is 4,500, and the on the date of acquisition the profit was 1,500. So we will minus that profit. So profit on the date of profit cashed after the date of acquisition is 4,500 minus 1,500, which is shown in your adjustment here. So we will minus that to know the exact profit after acquisition. So which is 3,000 rupees. So 10,000 plus 3,000, which will give you 13,000, which is your revenue profit. This revenue profit will be divided to H and minority shareholders. So 13,000 into the ratio 4 divided by 5, which will give you 10,400, and 13,000 into 1 by 5, which will give you 2,600. It's the share of minority shareholders. Next step is calculation of non-controlling interest. So particulars amount. Now under this non-controlling interest, the format is according to the format: face value of shares held by minority shareholders, add profit, share of profit of minority shareholders of capital profit, and share of revenue profit. So what is the face value of shares held by minority shareholder is 2,000 shares. There you can get this value in your first step, where out of 10,000, 8,000 is by parent company and the remaining 2,000 is bought by the outsiders. So 2,000 shares of rupees 10 each, which will give you 20,000. Out of that, capital profit of minority shareholder is given here, which is share of minority shareholder of capital profit under step 2, which is 1,300. So 1,300 is taken. Then we have got profit and revenue profits also. So the share of minority shareholders in the revenue profit is 2,600. So 2,600 from your revenue profit. So 2,600, 1,300 plus 2,600 will give you 3,900. So from 20,000 plus 3,900 will give you 23,900. So this is your total of non-controlling interest, which belongs to your minority shareholders. Next is calculation of goodwill. So in calculation of goodwill, the cost of shares held by H Limited, that is parent company. So this goodwill, where we will be checking whether the parent company has earned goodwill or capital reserve. So now cost of 8,000 shares held by H Limited. So that you need to check in your question. Cost of actual shares which is held by the parent company is, you need to check whether any investment is made by the parent company. So if you look into your investment share in S Limited, that means parent company has bought shares in S Limited. What is the actual investment made? 98,000. So the worth of 98,000 rupees shares are being bought. So that is the actual cost of shares which is being held by H Limited, which is 98,000. So now less face value of 8,000 shares parent H Limited. Uh, Face value of 8,000 shares. So face value of 8,000 shares is 8,000 shares which has been stated 8,000 shares of rupees 10 each, but actual investment what has been made is 98,000. So 98,000 is the actual cost which is spent, and number of shares which has been bought is 8,000 shares of rupees 10 each, which is the face value, which is 80,000. So it can be bought at the parent company is bought at a premium rate. So it is bought at a premium rate. That is why the face value is less. Next, we will minus H company share of capital profit. So from the capital profit, H company share. So this is the calculation of a capital profit. The share of H company in the capital profit is 5,200. So 5,200 is the share of capital profit. So the H company's share of capital profit is 5,200. So we will add 80,000 plus 5,200, which will give you 85,200. So from your cost which is actually spent by H Limited by investing in the subsidiary company is 98,000. 98,000 minus 85,200, which will give you 12,800. So this is a positive figure, so it will be called as goodwill. So now we have finished done with the calculation. Now we will be putting these terms into your balance sheet or allocating according to your balance sheet format. So now we will prepare the consolidated balance sheet as at 31st March 2015. First, equity and liability. First, we will have shareholders funds. Under shareholder funds, equity share capital, share of rupees 10 each. So equity share capital, when you're preparing balance sheet, you will be considering every figures of the parent company. So the working notes will be used only to allocate certain items in the balance sheet. That is, what is the share of parent company in S Limited, that is its subsidiary, isn't it? It's when it's having a subsidiary, the profit, the reserves, whatever is related to subsidiary should be accounted in the balance sheet. That is why we do the calculation related to subsidiary company to know the profit, reserves, and other items. So now when we prepare balance sheet, it is everything from the point of view of parent company. So now shareholders funds, equity share capital of rupees 10 each. So H Limited shares is 2 lakh rupees. Next, we have reserves and surplus. Reserves are 5,000, which is mentioned in the question. Reserves 5,000. Next, we have profit and loss. H company's profit is 5,000 as per the question. Profit or loss account. H company 5,000. Next, we have HS company profit. So this S company's profit will be taken from the revenue profit. As we are doing the balance sheet, parent company is preparing the balance sheet having in mind the subsidiary company. So when we take the profit of the subsidiary company here, we will be looking into the revenue profit, because revenue profit is a profit which is acquired after acquisition. So only the profit which is acquired after acquisition will be accounted in the balance sheet of the parent company. Only after acquisition they become one. Before that they are different individuals having different entity. So only the revenue profit will be considered in the balance sheet. So under profit and loss of S company, the profit will be the profit which is earned from revenue profit, that is share of H company which is given to 10,400. So 10,400 will be accounted under S company's profit. So which will give you the total of 15,400. So we can, this is the share which is earned by the parent company. Why are we showing it as S company? S company's profit is nothing but the profit of H company. So this is the profit which is earned by S company and being distributed to the parent company. That is why we are showing this is the profit of S company which is being given to H company. So this is the total profit of parent as well as subsidiary, which is 15,400. Next is our non-controlling interest will also come under this. So what is the profit which we have distributed or which has been gained by the outsiders will also be included here to show under the total profit and loss which is earned by the business. So the non-controlling profits interest will be from the working note 4, which states 23,900 is the non-controlling interest which has been distributed to the outsiders. So that will be usually be distributed from the profits what the company earns. So non-controlling interest, working note 4, 23,900. Next we have non-current liabilities is nil. Then we have long-term loans. So what are your long-term loans is bank loan which has been taken. So we will be taking long-term loan, bank loan, H company and S company, both the company's loan items will be taken. So which is 12,000. So 12,000 for S company. H company has not taken any loan. Next, current liabilities. So current liabilities, we have account payable. Under account payable, we have sundry creditors. So sundry creditors of H and S will be taken. So sundry creditors 40,000 and 20,000 for H and S. Then bills payable, which will give you 2,000 and 1,000. The total will be 3,000. So these are the liabilities or balance liabilities items. Just check in the problem, do we have any other liabilities which is to be recorded? Okay. Next we need to look into your assets. So the total of liabilities is 3,24,300. Next is your assets. When we get into your assets, we have uh, machinery, furniture, inventories, investments, sundry debtors, bills receivable, and cash equivalences. So let us get into fixed assets first. fixed asset, tangible assets. Under tangible assets, machinery 60,000 and 45,000 is being recorded, which will give you a total of 1,05,000. Next we have furniture of H and S is 2,000 and 4,000, which has been recorded. 2,000 and 4,000 will give a total of 6,000. Then we have, after tangible assets, we have intangible assets, which is nothing but your goodwill. We have got goodwill amount in your working note 5, which is 12,000, which is 12,800. So this 12,800 will be considered in your, and please mention the working note, working number 5, which is 12,800. Next is our current assets. Current assets, it indicates inventories, accounts receivable, cash equivalences. So under your current assets, we have inventory. So inventories are 42,000 and 65,000. So 42,000 for H, and for S is 65,000, which will give you 1,07,000. Next we have bills. We have sundry debtors. Under sundry debtors, the items are for H it is 18,000 and for S it is 27,000. So 18,000 and 27,000 is accounted, which will give you 45,000. Next we have bills receivable. Bills receivable is, as per the question, the bills receivable amount is 1,000 and 1,500 for S Limited. So we will be taking bills receivable 1,000 and 1,500, which will give you 2,500. Next we have cash and cash equivalences, 36,000 and 10,000 for S and for H and S, which will give you a total of 46,000. So the balance is 3,24,300. So both the assets and liabilities should match. Then your balance sheet will be right, and the calculation what you have done will be right. So the next problem is illustration 7. Consolidated balance sheet with intercompany owings. From the following information, you are required to prepare consolidated balance sheet of P Company Limited and its subsidiary Q Company Limited as on 31st/3/2015. Equity and liabilities: P Limited, Q Limited, share capital, shares of rupees 100 each. Then general reserves, profit and loss, loans, sundry creditors, bills payable, assets, furniture, plant, building, investments, 3,000 shares in Q Limited, loans and advances, inventories, sundry debtors, bills receivable, cash and cash equivalences are given. Then they have given adjustment, that is additional information. Bills payable of Q Limited includes rupees 30,000 due to P Limited. Sundry creditors of P Limited includes rupees 50,000 due to Q Limited. On the date of acquisition of shares, that is on 1st/4/2014, Q Limited's balance sheet showed a general reserve of 40,000 and profit and loss account credit balance of rupees 20,000. So these are the adjustments which we are going to work out in the balance sheet. So let us get into the solution. First step is calculation of ratio. So we need to check the number of shares of subsidiary company. So what is the number of shares which has been acquired by the subsidiary company is share capital, total shares is total share value is 4 lakh of rupees 100 each. Okay, then we need to check how much is the parent company acquired. So by this investments, 3,000 shares in Q Limited. So they have bought 3,000 shares from Q Limited. So in the calculation, number of shares of Q Limited 4 lakh of rupees 100 each, which gives you 4,000 shares. So that is the share of your subsidiary company. Now your parent company share is, according to the investments, it states that 3,000 shares are being bought from the subsidiary. So 3,000 shares are for parent company. So out of 4,000 minus 3,000, which will give you 1,000, which is 1,000 is the share of minority shareholders. So the ratio is 3:1. Next step is calculation of capital profit. Reserves credited on the date of acquisition of shares. So now in this question you have general reserves and profit and loss account for Q Limited, that is 50,000 and that is 1,50,000. And in the adjustment they have stated on the date, your third point states on the date of acquisition of shares 1st/4/2014,
Q Limited's balance sheet showed a general reserve 40,000 and profit and loss account credit balance of 20,000. So on the date of acquisition, in the sense that profit and that reserves will be taken in capital profit calculation. So we will take in capital profit calculation. So reserves which is earned is 40,000 and the profit on the date of acquisition of shares is 20,000. So the total capital profit is 60,000. So capital profit shares of P Limited 60,000 shares. I'm sorry, 60,000 is the total capital profit into 3 divided by 4, which will give you 45,000. Then share of minority shareholders 60,000 into 1 divided by 4, which will give you 15,000. Next is calculation of revenue profit. So calculation of revenue profit reserves after the date of acquisition, that is you have got your capital reserves and capital profit, that is the profit and reserves on the date of acquisition, that is nothing but pre-acquisition profits. Now in your balance sheet you have the total profit. Out of this total profit and reserves we will minus the pre-acquisition profits and reserves. So your general reserve total is 1 lakh. In 1 lakh we will minus 40,000, which is your pre-acquisition profit, which is included in the balance sheet amount. So according to the balance sheet, your total reserves is 1 lakh. 1 lakh minus 40,000. 1 lakh minus 40,000 will give you 60,000. Then when it comes to profit, the total profit as per the question is 50,000. 50,000. With that we will minus your pre-acquisition profit, which is stated that it is 20,000. So 50,000 minus 20,000, which will give you 30,000. So 60,000 plus 30,000 will give you 90,000. So this 90,000 will be distributed to the parent company and the sub minority shareholders. So 90,000 into 3 divided by 4, which will give you 67,500, and 90,000 into 1 divided by 4, which will give you 22,500. So the next calculation will be calculation of non-controlling interest. So non-controlling interest in the sense the amount which the minority shareholders will be taking it. So first is the face value of shares held by minority shareholders. So the face value of shares which is held by minority shareholders is 1,000 at rupees 10 each. I'm sorry, at rupees 100 each. So 1,000 into 100 will give you 1 lakh. So the worth of shares what they are holding is 1 lakh. Then with that we will add the capital profit and revenue profit which has been earned by minority shareholders. So the capital profit what they earn is 15,000 and the revenue profit what they earn is 22,500. So the total if we add we will get 1,37,500, which is the non-controlling interest amount. Then we will have the next calculation, which is calculation of goodwill or capital reserve. So cost of shares which has been held by the parent company. So the actual cost of shares which has been held by the parent company is 3,000 shares. The worth of it is 3,60,000. So we will be writing here 3,60,000. With this we will minus the face value of share. So what is the face value of share is, as per the question, is 4 lakh. 4 lakh of rupees 100 each. So 4 lakh is the face value of shares, but according to the ratio calculation, how much is the 4 lakh shares is the subsidiary company. How much is the parent company acquiring is, according to the ratio calculation, if you check, it is 3,000 shares of rupees 100 each, which is 3 lakh. So we will be considering 3,000 into 100, which will give you 3 lakh. Then we will we will also take into consideration the capital profit of parent company. So the capital profit which is earned, the capital profit which is earned here is by P Limited is 45,000. So 3 lakh plus 45,000, which will give you 3,45,000. So that we will be minusing by the cost which of the actual shares which has been purchased. 3,60,000 minus 3,45,000 will give you a difference in the amount of 15,000, which is a positive balance, and hence it is called as goodwill. So now this calculation is done. So we will allocate these calculations or the required items in the balance sheet. So consolidated balance sheet as on 31st March 2015. First is shareholders funds. Under shareholders funds we have equity share capital.
Equity share capital, as per the question we have equity share capital uh, as 8 lakh, so we will be considering 8 lakh. Next, reserves and surplus. Under reserves and surplus, the general reserves which we will be taking of P Limited, which is 2,90,000, 2,90,000 for 2,90,000 of P Limited. Then profit we will be taking for both, for P as well as Q. So profit of P Limited is 2,60,000. So profit of Q, we need to check it from the revenue profit, the share of the parent company, that is 67,500. So we will take 2,60,000 plus 67,000 from the revenue profit, which will give you 3,27,500. After the taking profit, we need to take the interest or the amount which is earned by the minority shareholders. That is, the amount which is earned by minority shareholders, working note 4 is 1,37,500. So 1,37,500. So next is non-current liabilities. So under non-current liabilities, we have long-term borrow and non-current liabilities nil. Then we have long-term borrowings. Under long-term borrowings, we have loan in the question. So we have loan. So loans are 2 lakh and 1 lakh. So 2 lakh and 1 lakh is been accounted in the balance sheet under loans, 2 lakh and 1 lakh, which will give you 3 lakh rupees. Current liabilities, we have sundry creditors, bills payable. So sundry creditors in the question is, this is 1,50,000 and 60,000. 1,50,000 and 60,000. So here sundry creditors 1 lakh for P, 1,50,000, and for Q it is 60,000. So the total will give you 2,10,000. Then we have an adjustment related to it. Sundry creditors of P Limited includes 50,000 due to Q Limited. So it means this indicates as where. So where in the question they have stated intercompany. So what is intercompany owings is where a subsidiary is liable to pay to its parent, parent is liable to pay to its subsidiary. So in adjustment, that is additional information we have, sundry creditors of P Limited includes 50,000 due to Q Limited. So what is your total sundry creditors in your problem, which has 1,50,000, and for Q it is 60,000. So they have stated here in the adjustment sundry creditors of P Limited. So your sundry creditors of P Limited is 1,50,000. So out of that 1,50,000, 50,000 is which has to be paid to Q Limited. So next they have stated that one more item, bills receivable. Bills payable of Q Limited includes 30,000 due to P Limited. So what is the bills? So what is the bills payable of Q Limited? The Q Limited bills payable is 40,000. So 40,000 is the bills payable of Q Limited, out of which 30,000 is to be paid to P. So it is a intercompany owing. So what can we do is, in order to adjust this, we will deduct it from the total sundry creditors and bills payable, because it is one account now. So when there is any intercompany owing like that, so for sundry creditors where P is liable to pay to Q, and for bills receivable, and when it comes to bills payable, Q is liable to pay to P. So it is when there is intercompany between the intercompany owings between the subsidiary and parent, it is better to set off in respective items. So under sundry creditors, P and Q's sundry creditors amount is as per the question, which is sundry creditors 1,50,000 and 60,000, and the intercompany owings as per the additional information for sundry creditors is 50,000. So from your sundry creditors, 1,50,000 plus 60,000, which will give you 2,10,000, minus intercompany owings as per the additional information 50,000, which will give you the balance of 1,60,000. The same way, bills payable. In bills payable, we have in the question the bills payable is
1,40,000. So 1,40,000, and the adjustment of additional information states bills payable of Q Limited includes 30,000 due to P Limited. So we will minus the intercompany owings, which is 30,000. So 1 lakh plus 40,000, which will give you 1,40,000, minus 30,000 will give you 1,10,000. So this is the total of your assets. So your assets total will be 21,25,000. I'm sorry, your total liabilities will be 21,25,000. This is your total of your liabilities, which is 21,25,000. Next is your assets calculation. In your assets, we have non-current assets, that is your fixed assets, tangible and intangible. Intangible, we will be having furnitures. We will be having furniture, plant, buildings. So we will be taking that your furniture, furnitures, plant and buildings. So furniture for PQ Limited, plant for PQ, and building for PQ. So furniture for P and Q, it is 2,50,000, which is 2,50,000. Next, for plant for PQ is 5 lakh plus 2,50,000 as per the question, which will give you a total of 7,50,000. Then for buildings, it is 2 lakh and 1 lakh. So the total will be 2 lakh plus 1 lakh, which will give you 3 lakh. Next, intangible assets, we have a goodwill as per the working note 5. As per the working note 5, goodwill is 15,000, so we will be taking 15,000. Next, we have current assets, loans and advances as per the question. Loans and advances is 60,000 for Q, so we will be taking 60,000 for Q. Next, inventories. Inventories is, under inventories, you have both for P and Q 1,20,000 and 1,20,000 and 90,000. So we will be showing 1,20,000 and 90,000, which will give you 2,10,000. Then in the question we have accounts receivables, that is nothing but your sundry debtors and bills receivable. Sundry debtors is 1,50,000 and 1 lakh, which will give you total of 2,50,000. So 2,50,000 is being taken here. 2,50,000. Then we will have intercompany owings. So when it is sundry creditors, it is a debtor to. So under sundry debtors of PQ 1,50,000 and 1 lakh, which will give you 2,50,000, we will minus intercompany owings for the information which is present in the additional information. When P becomes the sundry debtors and Q will become the sundry creditors when it is intercompany owings. So when there is additional information to sundry creditors, we will also be deducting it to sundry debtors and bills receivable and bills payable, because each parties, when they borrow between each other, both become sundry debtors and creditors to them. So now P company, the total 2,50,000, we will minus 50,000 intercompany owings, which will give you 2 lakh. Then when it's bills receivable, P company 1 lakh, Q company 50,000 minus intercompany owings of 30,000, which will give you 1,20,000. Next, we have cash and cash equivalent balances in the question, which states that for P the balance is 1,70,000, and for Q it is 50,000. So 1,70,000 plus 50,000 will give you 2,20,000. So the total of the assets is 21,25,000. Liabilities and your assets is matching, so the problem is right. So thank you everyone. The next problems will be discussed in your upcoming videos.